Welcome back to Daily DeFi. Today's June 11th of 2021, Friday. We'll be taking a look at the Bitcoin chart, Keep Network, Haven Protocol, and Synthetix, three altcoins that are down significantly on the daily, that are heavily discounted, while everything else, literally besides DAI, and DAI is a stable coin, is down about 5 to 10% on the daily timeframes. As you can see, we'll also be discussing this article about 1inch, these new features to their decentralized exchange aggregator with limit orders, and also Texas allowing banks to hold Bitcoin. So great news coming out of a lot of Latin American countries and now Texas. So it's great to see. But as always, we kick things off with DeFi Pulse and juicy NFTs to keep our fingers on the pulse of the decentralized finance marketplace. So the total value locked in decentralized finance sits at right below $60 billion at $59.5 billion. Just completely sideways and a little bit down over the past couple of days. Aave dominance is at 15.15%, while DeFi Pulse Index is down about 7% at 324.62. Now you can see Aave is really pushed above all these kind of next three competitors. These three competitors are very close to each other. In between Curve, Maker, and Compound. They're all very close. Curve did beat out Compound though, but just barely, right? By $0.01 billion. Moving on to juicy NFTs, daily volume down a little bit. This week we had seen that nice kind of high volume around the $2 million level. Now we fall about 22% to $613,000. Typically, CryptoPunks is taking up the majority of this. Then you have Sandbox Lands, ENS, Known Origin, all these other tokens, and it gets really small at the bottom. But first, this article from Decrypt. So let's break this down. Banks with a national charter can already custody crypto, according to the OCC. Texas says that's true of its state chartered banks as well. So the Texas Department of Banking today issued a notice confirming that state chartered banks may store cryptocurrencies on clients' behalf, provided they have adequate protocols in place for complying with the law. So let me just say, this is great. Like, these are all great developments, but in no way, shape, or form would I ever give my Bitcoin to a bank. Why? The whole point of Bitcoin is to get rid of the bank. Literally, the only way they can custody it is they have the bank's wallet. You send your Bitcoin to the bank's wallet, or they create a wallet on your behalf, but they still own it. It's like, man, the whole point of Bitcoin is to have your own private keys, have your own private wallet, and control yourself, be able to go anywhere you want in the world. It's truly the only thing where, let's say you need to cross a border or need to fly halfway across the world in a time of peril. Let's say things just go kind of haywire and you have to go across the world where, well, you can't really bring gold with you. You can't really bring physical gold. What if someone stops you and it takes a chunk of it? You can't really bring a ton of cash with you because, maybe at a border control, they'll custody the cash. They'll take the cash from you. They'll take a watch from you. They'll take jewelry from you. But the one thing they can't take from you is what's in your head. They can't take your private key or mnemonic. So if you have that mnemonic memorized, you can literally go anywhere in the world. But if it's with a bank, this is a different story. If the Texas bank says, oh no, you're on our naughty list, you're on kind of the black list. Well, this is a massive problem. So again, I would definitely not, trust my Bitcoin with a bank. But though that seems like a big victory for the state's cryptocurrency firms and users, in the department's view, nothing has really changed. Texas state-chartered banks have long provided their customers with safekeeping, custody. See, this is the thing: this is a completely different type of asset. I think people try and compare this with other assets, and it's like, okay, I understand why people say, okay, it's the digital gold, but they don't really understand the concept of cryptography, the private key, public key, hash functions, all these different things that go into what makes Bitcoin work, all the incentives and kind of game theory that goes on in the in the block mining and these automatic rewards with block times. It's a lot. So we can move on here to 1inch. If you have any questions about this, why I wouldn't custody my Bitcoin with a Texas bank, just let me know in the comments. I'd be happy to answer. It's pretty straightforward though. It's like, man, this is one asset that you can actually have your own sovereign rights to. You can have your own control. You have your own responsibility. And you should exercise that control. You should exercise that responsibility. Take things into your own hands. So 1inch releases composable limit orders. This is an article from Cointelegraph. The liquidity aggregator just beefed up its functionality with the limit order protocol, a new tool that may have use cases beyond decentralized exchanges. So as you know, currently with a lot of these decentralized exchanges, basically what you're doing is just doing a market order, right? So you enter the amount of, let's say, like Ethereum, you want to swap for 1-inch tokens. And when you do this, it gives you the updated price. Now you can cancel it and do it again once you see prices move. But what you cannot do currently with at least the kind of standard ones like Uniswap, a 1-inch, which is like I said, a decentralized exchange aggregator, or Sushi Swap, all these different ones. What you cannot do is basically set limit orders, and that's what we want to do. In limit orders, remember, it's like you get to choose what exact price to execute on. So you would set like, okay, this is the price I'd want to enter in. Maybe you set it a little bit below market, and then it automatically executes for you. So today, Decentralized Exchange Liquidity Aggregator 1-inch announced the launch of its 1-inch limit order protocol. The new feature boasts 5 different security audits and will enable users to buy and sell specific price targets on Ethereum via Binance Smart Chain and Polygon. So it's the layer 2 scaling solution Matic for Ethereum. The new feature will also be able to interact with the smart contract logic and be able to execute orders based on Oracle data. Limit orders are previously available to the decentralized finance ecosystem through a variety of protocols, including Gelato and OX. The latter, which wanted to utilize. Sorry about the yawning. However, the team claims this new protocol will be more gas efficient and secure in that it does not require admin keys, and that protocol will add additional value to the ecosystem via composability with other protocols, such as Uniswap version 3. So while the protocol immediately adds functionality of the 1-inch exchange, there are multiple possible use cases that the external teams have been invited to explore. So there's many other things here with USDC, DAI. So pretty interesting in my opinion. Again, let me know in the comments if you have any questions on that. Like I said at the beginning of this video, pretty much everything is down on the daily in the decentralized finance space. Uniswap, as far as market cap, is number 1 in the decentralized finance space at around $13.3 billion. Then you go down to Chainlink, just around $10 billion. All down, not too bad, but fairly down. So the reason this is Bitcoin has kind of been in this kind of topped out there a little bit in this triangle and has been pushing down. And then if you look at Bitcoin dominance, it's another kind of indicator there. So really what we want to look at seeing is, I talked about this in yesterday's video on a Unimex, a great decentralized exchange that allows for margin trading capabilities. But I also talked about Bitcoin and what exactly is going on here. Well, you can draw this. I would draw it like this. So what exactly is going on here, right? So boom. And boom. That's how I would draw it. So it looks kind of like we're in this descending wedge. So potentially what we could see is a bit of a further consolidation in between this. So we could see this kind of a wick down, maybe touch these levels, break down. Or what we could see is a nice little switch around where we, that happens. But the other opportunity would be that we kind of touch this, retest this, go back to these levels and maybe, retest this. That's when we could go up or go up, past these levels, touch this, get rejected back down, and then kind of fall back down into this pattern. Either way, again, it's not just about trading Bitcoin. Like yesterday's video, that wasn't the whole point of the video. It wasn't just about trading Bitcoin, although there is some interesting trade setups and you would have made some nice money if you followed them. The point here is to understand that Bitcoin is really what's driving these altcoins to move. So Synthetix, SNX, one of my favorite projects in the kind of derivative space. So creating synthetic assets in the blockchain. The use case is phenomenal, incredibly undervalued still in my opinion, especially when you think, okay, this is a top dog in the synthetic asset space, yet it's only $1 billion in market cap. So this has fallen pretty significantly from those tops, around $26, down about $15 from those highs. Volume is up about 181%, while the actual market cap and price is down about 15%. Then onto Haven Protocol, XHV on about 15,000 watch list, down about 14% on the daily, right around $11.44. Market cap is $161 million. Volume is very, very low. So that's right on the edge where I would actually trade this, right around $1 million. Sorry about that. Haven fell from, let's see, where were we at here? Right around 26. And now we've fallen to 11. So actually, quite similar to Synthetix. It's quite interesting. Okay, and then lastly, Keep Network. Now, this is a token that I got into, and man, this is one where it's like this, and there's a couple others that I've gotten into where it's pretty low market cap relatively, right? Like around $200 million. but the use case is awesome. And I've really considered doing a deep dive video on Keep. So let me know in the comments if you would like to see this. This is on how many watch lists? Yeah, about 16,000 to 17,000 watch lists. Market cap, like I said, around 200 million, volume around 14 million. Up about 370% in volume, and let's see, price is up actually 19%. So pretty interesting that Keep Network's doing so well, but everything else is kind of retraced a bit. So that's just the way the world works, I guess. There's some project that can actually pop off while everything else is going down. So that's basically all for this video. You can see how Keep Network is kind of a non-correlated, so that's quite interesting to watch. That's basically all for this video. Again, if you have any questions or comments, join the Telegram group, link down below in the description, or just let me know in the comments section. Like, subscribe, button all, invest global, and until next time.